Hello traders and welcome to another video review. Today is Monday, June 16th, 2025. Let's take a look what do we have in the economic calendar for today. So overnight data during the Asian session were mostly from China. Industrial production down from 6.1% to 5.8%. Fixed asset investment down as well. Basically, bad bunch of data from China had been published. So we will see how this impacted the markets later on. PPI from Switzerland, minus 0.5%, worse than expected 0.1% by the market participants. We are still waiting for the data from the Germany. German Joachim Nagel, Buba President Joachim Nagel will give a speech at 9 o'clock. At 10 o'clock we got the CPI from the Italy and some kind of a bunch of data from Turkey as scheduled for release today, Turkish retail sales and budget balance. From the Eurozone we got wages. Wages are scheduled for release at 11 o'clock. Previous number was 4.10%, and some bunch of the data from the China continues. 11 o'clock, new loans from China. OPEC monthly report will start the data release during the US session. This one is scheduled for release at 1 o'clock. Then we have housing starts from Canada at 2:15. Then we got New York Empire State Manufacturing Index at 2:30, and then data from the US continue 20-year bond auction is scheduled for release at 7 p.m. and that's about it. So as you can see, quite busy day. Most likely not much will happen, and the market will be still under the influence. We'll be watching the developments of the recent conflict on the during the Israel and Iran. So please be aware of this situation as well. It might have much bigger impact on the markets as we have right now from the data. So without any further ado, let's switch to the charts. We will definitely talk about the gold today, so please stay ahead. First one is, as usual, the euro dollar. So the euro-dollar 4-hour time frame chart is looking quite bullish, but if we switch to daily, we can clearly see that this movement to the upside is being continued. But remember that we just started the second part of the June, and this is the second quarter of 2025. So it went very fast, right? 1.1574 is the technical resistance. Now I will mark it still as the resistance, as the red line, despite the fact that just above it we still have the level of 1.1632, which is another swing high. As you can see, there is a distinct divergence on the RSI and on the price on a daily time frame chart. So we got the new high, and then we got new high, so this is the swing high, but the momentum doesn't actually do any sort of the new swing high. So we got the bearish divergence. We might see some sort of the downside movement, some sort of the correction. If we look at the situation here on the daily time frame chart, we can obviously apply our impulsive wave pattern from Elliott wave. As you remember, we got this before. So this one was the wave 3, that's possibly the wave 4, and this is the wave 5. So we got the perfect example of the Elliott wave impulsive pattern development, but this is not the end of this pattern, because we still need ABC to the downside to be done. Okay, so the corrective pattern needs to be done before we will complete the whole cycle. The most probable target, the usual target for the wave C and the whole simple correction is somewhere around the wave 4 low, which is 1.1066. So please be aware of this situation. We possibly had completed the upside movement, or we are very close to complete this upward movement, impulsive upward movement. Especially this wave 5 might be very close to the completion, or it is already done. We need to take a look at this situation here, what's going on, to say it, to confirm it. Okay, so that's our situation here. Of course, we can apply some trend line here, so that's not a problem here, and well, it's very weak trend line, as you can see, only 1 point of the support. However, any breakout below the yesterday's low at 1.1490, oh sorry, this is a Friday low, obviously, 1.1490 would likely cause a further development to the downside. Please keep an eye on the situation, as we might see some sort of the corrective decline to start after the breakout below this level. Otherwise, we are very close to finish the wave 5. Maybe this is the top of the wave 3 of the wave 5, so we need some correction, last push to the upside, and then very sharp reversal. All right, so that's the euro, the dollar. The other one we are going to take a look at is obviously the cable. For our time frame chart of the cable, just as we spoke about it, we got the ABC to the downside done, as we said, just as we got it in our let's say scenario, right? So we have the first wave to the downside done. Now the situation is quite unclear, because it looks like this pattern is evolving into more complex correction. All right, so right now we might spend some time here in this range. Obviously we need to add another line. So first one is 1.3615, the other one is 1.3631, and both of them will make some sort of the very narrow supply zone, right? But this is the zone that is very, very nicely being established for the bulls, because it's a corrective zone, but it might be more complex and more time consuming than it is right now. So we are waiting for this situation here to be completed, and then the market is ready to move higher. US dollar versus the Japanese yen. For our time frame chart, if you remember what's happened here, let me just do the quick recap. We got our black trend line. As you can see, we got some sort of the false breakouts, and then go back under the trend line. As you can see, then another breakout. So it looks like the market doesn't respect this trend line. So we will get rid of this trend line from our chart. Let me just move this technical resistance 145.48. Another technical resistance, obviously we need to apply this one here, 146.29, another technical resistance, and the market keeps moving inside of this zone below the trend line, the orange trend line, above the demand zone. You can see it here quite clearly, bouncing around the 100 periods moving average on a 4-hour time frame chart, and below the supply zone. So not much has changed here, as the market is continuing some sort of the trend, the sideways trend. Last two markets, or maybe three, we got the first one is of course the crude oil, which increased a lot since the Iran-Israel conflict started. So we got this technical resistance here, 80.67. That's the technical resistance, and we can apply one more line here. So we got 78.48, right? So we increased. This is daily time frame chart, but in recent days we increased from 60 to almost 80. So that's almost 20%. Okay, and of course the market is on the extremely overbought levels. Nevertheless, this movement to the upside is driven by the geopolitical situation here. So please be aware of the fact that maybe the data might not be as effective as they used to be. For example, crude oil resources and stuff like this. It's much more important to remember that the current situation on the crude oil is driven by the situation on the Middle East, right? So, and the conflict, Iran-Israel conflict. So let's just stay with this. As you can see, the more severe the conflict gets, the higher the prices of the crude oil will be. So right now, its technical analysis is not quite useful for this. Nevertheless, if we take a look at the gold market, the gold is moving up. We don't need this channel here, we can clearly see that the market is using the 100 periods moving average on a 4-hour time frame chart as some kind of a support, dynamic support, and keeps moving higher. Recently we made a high at the 3450 level, and this is extremely overbought condition again, but it looks like the market might even go higher after a short pullback. So we might get down towards the 3390 level, and then the market might be ready for another push to the upside. So the gold is still in the uptrend, nothing changed here. This looks like the pause or like a sideways trend or a pullback consolidation, you can name it as you want, as a break in the uptrend on gold. So that's nothing new for us, we all know this. And the last but not least, it's a Bitcoin, and the Bitcoin on the daily time frame chart, as you can see, is a mixed bag of the data, because it's going up, it's going down inside of this range, right? So the range is clearly defined. We got the demand zone between this is 99,425 and 100,633. That's the demand zone, and the supply zone is very close to the all-time high, 110,100 and that's 12 or 11,000, 111,867. So we go from the extremely oversold market conditions towards the extremely overbought market conditions towards the extremely oversold market conditions, and up we go. So purely oscillating market right now, but what is very important, we need to mention that it's oscillating around the all-time high. So the pressure on the Bitcoin is still visible. The bulls are winning this pressure, and every time the market goes down, they are buying the dip and trying to push the prices higher. So Bitcoin is right now getting ready for another rally to the upside. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.